Okay, coming at you with another variable rate update. So a lot of chatter, a lot of articles, a lot of noise happening, in my opinion. Next Bank of Canada meeting is July 13th, so no rate changes. Pretty big bump of fixed rates there. Lots of them are above 5% this week, but obviously variable rate's not going to change until July 13th. We want to address a few things today. Big thing is that the Bank of Canada is toying and really gaining a lot of steam that they're going to move rates up 0.75%, which is 75 basis points. So prime sitting today at a 3.7 rate, and they're talking about that going up 75 basis points will be 4.5. So that's something. And we need to be really realistic at this point that we have a lot of feelings, a lot of theories. There's a lot of things we can look at. A lot of people go, rates will just come back to normal or all these things. But we have to be really aware of the fact that the Bank of Canada is really not taking into consideration a lot of things. They're obviously moving rates up to the detriment of a lot of people and mortgages, not really taking a lot of consideration for the effect, even though they might say it makes sense. With where inflation is, the truth is we're not really moving inflation. Yes, we're slowing the housing market down, which I've always thought was a big part of inflation, but we're not slowing the cost down of other things, gas, goods like groceries and those types of things. So those are showing no effect by raising interest rates, and I don't think they will. And so at this point, there's a lot of videos we'll do and a lot of things we'll say, but at this point we're going to approach things. What if this rate keeps going up, and how are we tackling it? What are we going to suggest, and what we're going to recommend to you? With fixed rates being higher, we want first. Let's touch on that. Is there going to be a point that we're going to get to the lock-in at this point? Well, fixed rates are already in the 5.5 range. And then the other thing, people go, well, there's still a little bit of groaning to the idea, like maybe if I would have locked in earlier, that'd be better. Remember, your mortgage penalty to get out of your mortgage early is a primary reason why we go variable or fixed. We say this all over and over all the time. But people go, well, rates are higher, I wouldn't have a big penalty. That's not true. When you're paying a mortgage early, it's based on the comparison rate. So if I have 3 years left, it's based on a 3-year rate. If I have 2 years left, it's based on a 2-year rate, or whatever that might be. And so that is a big factor on things, and those are rates that are not commonly known. They're not the discounted rates. They're the posted rates of the bank that set those penalties. So the truth is, the penalty you're paying is not a rate you're seeing, and this is really, really important, because those are rates you're not paying attention to when you're getting into mortgage, but they are the rates that affect things on a penalty. Now let's just assume at this point that rates continue to go up. What are we suggesting? The first thing we're suggesting is really what I'm trying to think about now is the idea that we would run the 7% run. Oh my goodness, Joel, do you think rates are going to go up to 7%? No, I don't. But here's what I think. I think that if we look at what your interest rate might be when you're at 7%, which is an insane, outrageous number, what I found in talking to people is that when we calm things down and we think about what our payment is and what it's went into, it's not as meaningful as people think it is. And so this is important. So why are we running a 7% test? Because that's an outrageous number. And if I run your mortgage as if you're paying 7% and you go, that wouldn't be so bad, that's going to make you feel a lot more comfortable. Like there's not going to be a rate change that's going to stress you out. Now, if that number is going to make you feel uncomfortable, there's two options that we can look at for people. First off, again, moving your mortgage over to static payment. So the variable doesn't change, the payment remains the same, still gives you the penalty advantages. 2, we can re-amortize your mortgage. Tons of equity in the market still, so maybe you're paying it off 20 years. Let's just say it's a 30, or there's some option of 35, 40 years. That's going to lower your payment down. Does it mean you're going to chunk off principal? No, but it means that you're going to have a low payment and be guaranteed a low payment for quite some time. So that is going to be a consideration as well. The last part of the factor that we really need to think in is we really need to clean up anything that's not related to mortgage debt. A lot of people hanging around credit card debt, student loans, car loans, all that stuff. What are we looking at as far as those payments? Let's better your cash flow. We don't necessarily need to break your previous good rate, but let's restructure and redo things. So if you haven't done a payment reset on everything, and an option could be considering at this point, what is the equity in my house, and does it make sense for me to take some out? There's going to be a shrinking down of credit problems as we think about liquidity going away. So banks not having as much money to lend, or the freedom to do so. this means that there will be less options to take money out, and it may make sense to take some money out early. Say I'm sitting on another 50 grand or preparing in advance. The solution is not a line of credit, just in case. A line of credit is a demand loan, cut off at any time. We'd have to actually take the money out. So anyway, if you want to run this test through, let's run the 7% test. Let's look at let's go look at a payment fixed and a payment re-amortized. Let's think about doing that. That's going to hold things at bay for a few years for you and make sure you don't have a situation that's going to be a problem. Now, especially we want to be doing this stuff if you think there's going to be any change to your employment, if you think you're going to quit your job or switch employments or switch jobs, then we have less options. So let's do that now. So that's your variable rate update for this week. If we can help you, anybody you know with this, please do share that video, subscribe, and send this to as many people as you can. That would really help us out. And if you have questions on your mortgage, please do reach out to us. We'd love to help you with that.